And from gas, we look at Nigeria's reserve. Well, the country's FX reserve recorded its first gain in 4 weeks as it increased by $21.11 million week to week to close at $39.55 billion. That's at the 29th of March. Has this increase come to stay, or is it transitory? We have the Chief Economist at PWC Nigeria, Nevin, now joining us for that conversation. Good morning, Mr. Nevin. Thank you so much for joining us.
Good morning, Yini. Wonderful to see you this morning.
Good to see you too. So Nigeria is the first African country to access the international capital market this year. It's raised 1.25 billion via Eurobond. Does this account for the FX reserve increase that we are seeing?
I mean, it's hard to say. It just bounces around. It's a very small increase. I wouldn't read too much into it. I mean, it's great that we were able to tap the Eurobond market. I think the interest rate was lower than was expected. It shows people have confidence in the Nigerian economy. But I wouldn't read too much into week-to-week or month-to-month fluctuations in the FX. There's a lot of moving parts to the FX situation in Nigeria.
So you think that increase that we saw in the FX reserve is ignorable?
Well, I think sometimes in Nigeria, whether it's inflation or the FX reserve or the GDP numbers, we tend to pay attention to kind of small, temporary blips. I mean, what we should be concerned about is the direction of travel for, say, FX reserves positive. As you say, it's the first increase we've seen in a while. So we haven't seen the FX reserves have been pretty stable. We certainly can't say they're increasing over any kind of trend line. And I mean, I think people are all aware now, one of the biggest issues going on, I mean, you can ask yourself the question, oil is at $130 a barrel. Why is Nigeria not doing better? And the reality is we're having a real problem with production, not just with production, but particularly now, I think it's now widely reported that there's a huge amount of theft of onshore oil. So onshore oil is about, I think, 40% of the oil that Nigeria produces. And some reports saying we're losing 90% of that before it gets to market. So if we're not benefiting from the oil price, that's the primary reason why. Because we would think if we were truly an oil economy, if oil was $130, we're benefiting, but we don't really see that. And we haven't seen it certainly in the FX reserves. I mean, the number you've cited, it's increased to $100 million. That's very little in the context of the Nigerian economy.
Yeah, you know, when you mention oil, a lot of pictures just run through one's mind. And one of it is the issue of oil theft and vandalism, which even the government has been complaining about. I guess that's one major reason we haven't been able to make the most of the oil rally at this time.
Yeah, I mean, you go back to 2016, I mean, we're all lamenting the recession brought on by the drop in oil price. So, but the converse of that is, we should be able to benefit when oil price is high. So as I said, I think it's extraordinary, and all Nigerians should be asking themselves the question, how is it possible that we have $130 oil and we're having such difficulties with exchange rate, with the parallel market for the Naira? Of course, part of the reason is because as the price of oil goes up, we have the subsidy, oil subsidy goes up, which is obviously in the news all the time right now, and different views on where to go with that. But we're talking about 3 trillion Naira subsidy in the current estimates of the current oil price. And then simultaneously, we're not getting the volumes that gets the dollars into the country. So it's a bit of a sad situation. We suffered when oil went down, and we thought we would benefit when oil gets up, but it doesn't seem to be the case.
Is there anything from your perspective that can be done about that? You talked about the onshore oil being a major, and yet we seem to be losing a lot from that.
I mean, obviously, I think, the security apparatus, I'm not an expert in security, but we're all aware of the impact it's having on the country and the human toll. I mean, the terrible events in Kaduna over the last few weeks is just one example. So obviously there should be efforts there. But I think the other thing, and of course your previous segment talked about it, is I think there is a unique opportunity to do gas. And of course the previous speaker was saying, we should do gas domestically first. I guess I would say there's so much gas in the country, we can do gas domestically, and we can also export more. I mean, and if you go back a few weeks ago before the war, Europe essentially said it would never invest any more money into hydrocarbons, which really meant it would be very difficult for us to get the investment that was laid out in the national gas plan to exploit the gas. Now Europe, because of the energy security situation, the terrible events in the Ukraine, the relationship with Russia, has recognized that it needs alternate sources of gas. And I would assert that probably the #1 alternate source is actually Nigeria. So I think we should be spending a lot of time as a nation, the federal government, talking to the Europeans, particularly the Germans and the relevant energy companies. How do we get gas production up in here and help Europe's energy security situation? I mean, I said a number of months ago, even with the gas strategy, it may be a little too late because people were moving away from investing in hydrocarbons. But now the world has changed. I think we have a chance to benefit from our gas. NLNG has been very successful, but there's many more trains, as they call it, to come to expand the gas. And I think we should be urgently looking for that. I mean, the central bank and the government as a whole has been very clear we need to increase our FX receipts, and natural gas is probably the single biggest opportunity over the next sort of 2 to 5 years.
Yeah, but even if we get investment into developing gas at this time, I mean, there's going to be a time lag between when you invest and when,
absolutely. But I mean, as the Chinese say, the best time to plant a tree was 50 years ago, but the second best time is today. I mean, what's our choice? I mean, we were slow with the PIA, and now we have it passed, and now we have a change in the geopolitical situation where people urgently want to get new gas very quickly. So projects that might have taken 5, 7 years in the best of times will now be collapsed to 3 to 5 years on that, and we need to take advantage of it. I get your point. We should have done this a decade ago, but we can't change the past.
All right, well, let's go back to that Eurobond conversation we're having. And one of the observations from that Eurobond was investors' interest. You mentioned it in Nigeria, and it tightened the price at 8.37% per annum. This investors' interest and then the tightening of the price, what does it say about Nigeria's economy? Does it say things are not that bad anyway?
Well, I mean, I personally have been, very publicly saying I'm very optimistic about the economic future. You can see a lot of things turning in the country, but I think that people outside the country who are knowledgeable do recognize one thing that's critical, which is Nigeria is a very rich country. We have enormous assets, and I don't think, and the level of indebtedness we have is actually very small, particularly in U.S. dollars. So, I mean, there's really very little chance of a default unless there was some kind of major political event. But as long as we continue to have a not perfect, but no one's perfect sort of democracy and peaceful transitions of power, I think we're a very good bet that way. And so we have plenty of assets to cover the kind of borrowing that we have. So it's not a big surprise to me that interest rates would come in. And of course, this isn't a world environment where interest rates are rising. But I mean, people I think consider Nigeria kind of, as I said, a relatively good bet because of our relative political stability despite all the challenges. But also we just have so many assets: gas, oil, minerals of all sorts. So, I don't think likely we'll default. Those things will be developed instead of defaulting.
And that also brings the issue of the debt stock of the country to attention. I know last year we talked a lot about this, and now we see that the debt management office has released for the fourth quarter of 2021, where we see a 4.1% increase to 39.57 trillion. And of course, there's been the argument, should it be debt versus GDP or should it be debt versus revenue? From your perspective, what should it be measured against?
Well, I think the debt versus GDP is the classic number. We all understand we don't collect much tax revenue. So when you compare the debt or the interest payments to the tax revenue, it seems calamitous. I mean, our view has been very simple. I mean, people have said there's a debt problem. We don't agree. And then other people have said we have a revenue problem. And, obviously the government should be trying to raise revenue in appropriate ways. But our consistent view is we have a growth problem. If the economy grew 6, 8, 10% a year, which is perfectly capable of growing, we wouldn't even be discussing the debt. I mean, the official NBS numbers for the fourth quarter the economy in 2021 is about 200 trillion naira. Now, we also believe that's an underestimate. There's going to be a rebasing. So let's say the economy is 250 trillion naira. I think personally maybe a little bit more. But at 250 trillion naira, we have a debt of 40 trillion naira. It's still very small in the context of nations around the world. So as I said, we have a growth problem. Once we grow 6, 8, 10% a year as we should, no one is going to discuss the debt.
And then when you say we have a growth problem, how do we get out of that problem?
Well, I mean, I think we've been consistent the last few years. Some of the key things that are critical here, again, go back to being a very rich country. So we put out the paper a few years ago on dead assets. So we have too many assets that are not productive in the country. I think there's been a lot of movement on that. People talk about dead assets. Obviously, it's been focused on the refineries and Haja Steel, which are the big national ones. But there's also been a big focus on government real estate assets, things like the National Theater, which are not producing a return, or there are now projects to help them produce a return. So I think that's one aspect. The distortions are things that many people talk about and need to be addressed. So the foil subsidy, the electricity issue, and of course the FX issue are some structural things that need to be addressed. I mean, we have been in the camp for 5 or 6 years of saying, look, we need a single unified exchange rate. It's just too difficult to run a business and to take, many businesses, for example, in Nigeria, maybe they produce 85% of the value added in Nigeria. So they still need to import a little bit of raw materials that are not available here. The problem is when you have such a complex FX regime, an opaque FX regime, that becomes difficult. So you're hurting the production where 85% of the value added is in Nigeria. So we do think those issues need to be taken on. We've also said for a number of years that we need a simplification of the way that certainly the federal government works. Too many MDAs. We know they were created for other purposes, but at this point in time, we had the Orange report. We haven't quite executed on that. So there's lots of things that we know we need to do, but I think we're close to doing some of them. But the most encouraging thing I've seen in the last 2 or 3 years is you're really seeing states take their economic destiny in their own hands. I think they learned after 2016 they couldn't rely on the federal allocation to finance what the state wanted to do. There's a number of governors that are really trying to take their state forward very significantly. I mean, obviously, for us, Governor Obaseki has always been one of the leaders of this. Governor Fayose in Ekiti, Governor El Rufai, His Excellency in Kaduna, though he's faced real challenges. So the fact that we're seeing so much happen at the state level, I think, is diffusing throughout the nation. So you get more and more states that are, I think, electing people that are going to take the state forward. Really encouraging to see Governor Saludo, His Excellency in Anambra, and his plans to go forward, and just his competence, his technical competence in the economic area on that. So, I mean, we're optimistic, and it feels closer to getting to that 6 to 10% growth rate than in my 13 years here. We just need to focus on some of the fundamentals and build on the successes we have. And I think a lot of people outside of Nigeria just read the headlines on there and aren't going deep in what's actually happening. I mean, again, to reiterate, we actually think the economy is quite a bit bigger than the NBS reports. It's not a criticism of the NBS, but over 50% of the economy is in the informal sector. It's hard to capture that with official statistics. So we have a lot more economic activity that's going on. But, one other thing I'll say that's just a major trend for the country is we have more and more young Nigerians inserting themselves into global value chains. Now, this could happen in a corporate sense. So companies like Outsource Global, which has 1,000 seats in northern Nigeria, educated Nigerians serving US and UK companies, being paid in dollars, bringing FX into the country, supporting their families with high wages. It's also happened at the individual level. We're having people in Nigeria hired as coders, hired as bank compliance officers, getting paid in euros, getting paid in dollars. And I think that is something that the government really needs to embrace. And in particular, the more bandwidth we have, young Nigerians will take advantage of that to insert themselves in global value chains. And I think that's a really critical economic policy the government needs to think about.
Yeah, a whole lot you've dished out there. Nevin, thank you so much for sharing your thoughts with us. And of course, as you mentioned, the informal sector should be incorporated into the NBS data gathering and infrastructure, as you mentioned, one of them being the internet. Thank you so much, Andrew Nevin, always there when we call you Chief Economist at PWC Nigeria. Enjoy the rest of your day.
Very welcome, Amy. Thank you so much.
So we'll take a break now. When we come back, we'll discuss rural-urban migration. Has it gotten better? Is it worse? Find out here on Business Morning on Channels Television.